Singapore's Temasek Holdings saw more modest gains in its annual net portfolio value, which crossed 400 billion Singapore dollars for the year that ended March. Its one-year total shareholder return came in at 5.81%. While positive, it was lower than the previous year's at 24.5%. Asia, led by Singapore and China, continued to make up the large part of that portfolio, with growing exposure to the US. I spoke to Martin Fichtner, Temasek's Deputy Head of Tech and Consumer, and asked him if he sees opportunity in the recent sell-off in Chinese tech.
We think about the opportunity and technology broadly in every market in the world and in China as well. The consumer internet platforms will continue playing a role in China and in our portfolio. At the same time, we're looking at areas that are merging deep tech, software automation, that are maybe at an earlier stage, but are increasing pretty dramatically.
And as far as the regulatory uncertainty is concerned, Martin, do you believe that in the Chinese context we've seen peak regulatory uncertainty, or are there more problems to come?
It's hard to comment on the specifics. I do think that a lot of investors, including ourselves, were caught out a little bit by the magnitude and surprise of some of the regulatory actions. At the end of the day, though, the government is trying to create a healthy ecosystem for business, and we're seeing pressures like the ones that we saw in China in other parts of the world around data privacy, around data security, et cetera, as well.
And if we can turn to large cap tech in the US context, how much further in terms of potential downside action does this multiple re-rating have to run when you consider the impact of bond yields on forward earnings, the regulatory uncertainty, and some sky-high valuations that we have seen?
Well, a lot of the correction that we've seen in the markets can be attributed to a valuation multiple correction. In fact, the vast majority of it can be attributed to it. I think the question that we are waiting for to resolve in the US is there going to be an earnings slowdown? I know we're entering earnings season now. Us and everyone will be paying attention to that. It goes back to the question as to whether there's going to be a recession and how deep it might be.
And as far as relative opportunities are concerned, do you think China and the tech sector there is a better bet than their US counterparts?
We think about both markets, and we think about opportunities aligned with some of our key structural trends. And if we think about our fundamental structural trends of digitization or sustainable living or future of consumption or longer lifespans, we see opportunities in all markets, and we will pursue them from a bottoms-up basis. We do see a healthy environment of innovation in China. We see a healthy environment of innovation in the US and in Europe as well, for that matter, and we're pursuing opportunities in both.